All right, everybody, thanks for joining me for the April 2026 housing market update. The war in Iran is still raging. It's still going on. A month ago, we talked about how it would impact things. This month, we're seeing how it's impacting things in terms of inflation and interest rates, so on and so forth. So let's check it all out. The market's still kind of frozen. I think that's the headline of where things are at with the marketplace. Nationally speaking, it's really a tale of two stories. We primarily bring you information from the Northeast, where we operate in the northerly suburbs of New York City, in both New York and New Jersey. We track our data for three specific counties: Sussex, Orange, and Passaic County. And we kind of give you a lot of information on those three things. But here's some just headlines. The 30-year fixed rate currently sits at 6.38. About a month ago, we were below 6. As you can see here, 5.98. Mortgage applications are down 5%, and it's really largely due to this ongoing war in Iran and the oil price spike that has been happening. Rates reversed. The window briefly opened, right? February, it was 6.84. Then it dropped down. February of 25, excuse me, was 6.84. February of 26, 5.96. So we saw a significant drop year over year, but then we saw a really quick step up again, basically due to the war in Iran. New York numbers are interesting. It's actually the lowest inventory on record since the National New York State Association of Realtors has been tracking these numbers. It's the lowest level on record. They've just never seen lower inventory than we have right now. So it's actually down 4% year over year. However, average home price around 4.25 statewide in New York State, which is really relevant to New Jersey, Connecticut, and all of our area. I think if you go state by state, you'll find similar things where inventory is at an all-time low. Prices are kind of holding. You're not seeing a major increase in price, but you're not seeing a decrease either. Decline in closed sales statewide, 10%. That's a little bit higher than our area where we are. But nonetheless, we have also had a decline year over year in sales. And 30-year mortgage rate down from about 6.1 in January to 6.84. So, how are our three counties performing? Again, this is a mixture of New York and New Jersey. Just the headlines: new listings, units sold, average price, days on market, kind of flat, really. When you look at just on the whole, all of them, there's not much of a movement up or down in either case. But again, you are starting to see units sold still continuing to decline. Days on market is marginally increased, meaning that that bodes a little bit better for buyers, but not really. And at the end of the day, right, the average sale to ask price in all three of these counties is right at or above 100%. So there's just still not much wiggle room in terms of negotiations for homes. However, the importance of pricing your home right should not go without mention. It's extremely important to price your home right. But those homes that are well located, in good condition, and priced right, they're gone. So here's a little bit of a deeper look at new listings, Q1 of 26 versus Q1 of 25. And what you're seeing here is that, we're basically a tick below or even. So there's really not much to report. But I think that this is an important point to note here, is that we still, as we stand right now, are 30 to 35% below where the market was in 2019. I like to look back to 2019 because it's the last year before the pandemic, before things got really crazy, right? Once 2020 rolled around, we had a crazy booming market for, 4 years, basically. And then after that happened, we've had a crazy downturn in terms of the number of transactions. So it's just hasn't been a normalized situation for the last 6 years. So we look back to 2019 as kind of like an indicator, a time in which we can find some normalization, if you will, right? And we're 30 to 35%. That's a large percentage in the number of new listings coming to the market. So we're still well below where we should be. That's the point. So what does this mean for buyers and sellers? Well, inventory is still tight. So if you're a buyer seeking that home, you got to come to the table ready to go and put in a really strong bid. But on average, prices are still rising, albeit not as much as they were a few years ago, but they're still rising, if not flat. So it's just not a situation in our market territory here where the prices are zooming off the charts, so on and so forth. So let's bring in Amy Green, my big sister and mortgage lender extraordinaire, to talk a little bit about mortgages and the points that she wants to make here about rates, to whether to lock or float, and the adjustable rate mortgages. Go ahead, Amy.
So, hi everyone. Thanks for having me. These are good points, Jeff. I would say yes, rates have hit a 6-month high. However, I will say 2 weeks ago they were higher. So I'm grateful for that. So we should all be grateful for that. And again, yes, they are definitely lower than a year ago. And there is a saying out there, marry the house and date the rate. You can always refinance in the future, right?
No doubt.
So, okay, lock or float. Now, that's a tricky question because there is a lot of volatility right now, right? So you have to, it's the buyer's choice when to lock. So you just present them with the information, let them make the choice. Now, lock or float, if I tell my buyers lock 2 weeks ago, boy, they'd be pissed off right now because rates came down in the past 2 weeks. So yes, I mean, it depends on the buyer and what they want to do and the information that we have at the time. So yes, I prefer locking because I think that protects, there's more of an upside risk than a downside risk, if you will. So I do agree with that. However, it's up to the buyer at the end of the day.
Yeah, it's interesting that ARMs are making a comeback. I find that interesting.
So that is interesting because I have over 70 investors I can choose from. And
are you bragging?
99% of them, their adjustable rates are not as good as the 30-year fixed. There's like maybe one or two. And with that being said, it will require a higher credit score, more money down, lower debt to income ratios, and reserves. So you got to
but if you're one of those people and you can get a lower rate, and you're kind of, because like in my mind, I feel like rates are probably as high right now as they're going to be for a long time. So an ARM, it might be an interesting solution for somebody who is well-heeled financially and can do it, meets all the criteria.
I absolutely agree with that. It depends on the buyer, what their financial condition is. Are they planning on being there short term? If they're planning on being there short term, it makes it simpler for them to decide yes or no. But certainly if they're planning on being there longer term, then it can be riskier to get into an adjustable rate situation, especially because you never know what your future holds. When you have to, when your rate adjusts in 5, 7, or 10 years, maybe your wife is at home with the kids and not working when she was working today. Can you actually even afford to refinance in the future? You got to think about that too.
Everything is a gamble. When I wake up and put my pants on and I walk out the door in the of my house, I never know if I'm coming back in. Everything's a gamble. So I think the good thing is that there's options. The good thing is that the mortgage industry is healthy. There's a lot of choice in terms of products out there. Amy, you mentioned you have over 70 different underwriters, investors, so on and so forth that you can tap. So it's a robust marketplace and there's plenty of opportunities. And I think the point is, if you're somebody who doesn't own a home right now, you should still pursue the American dream. It's still the best thing going. It's going to help you build wealth and equity over the course of time. All right, Amy, as far as the mortgage part of this goes, do you have anything else that you want to say?
No, I would agree with everything you said, and that how housing is such a great investment, especially when you lock into that payment. As inflation goes over 30 years, you're locked in at that low payment for 30 years. Just think about that.
Yeah, real estate investments are one of the greatest hedges against inflation that there is. So it definitely pays to own real estate. You're doing yourself a great favor by owning real property assets, starting with your home. All right, great. Amy, thanks for checking in. Let's wrap this up with some key takeaways for buyers, sellers, and agents. So look, number one, mortgage rates reversed course, right? We were seeing rates coming down. Everything was looking good. And then boom, bombs started flying over in Iran and rates, spiked back up. So we'll see how things go. Of course, we're going to keep our eye on the conflict in Iran over the course of time here with the housing market update. We'll continue to give you updates each month. New York State housing inventory hit its lowest level on record. I guess the good news about that is how much lower can it really go, right? Hopefully we've hit bottom finally, and maybe we'll start to see some increases, meaningful increases. New listings are essentially flat year over year across our area here in the Orange, Sussex, Passaic, northerly suburb area of New York City. Home prices continue to rise in all three of our counties year over year, despite the stagnant market. And sellers who price it right are still closing at or above asking price. That's a fact. And like I said before, the spring season, it's in jeopardy. A brief spike in the rates is causing short-term delays, and hopefully it doesn't impact the rest of the year, but we shall see as time goes on. So that's it for this month. Thanks for joining us, and we'll see you next month.